morning, good afternoon, good evening, wherever you are in the world. Welcome back to Passive Income Mastery TV with me, Dennis Bay. And today is episode 2. And today I am going to be explaining to you more about what Robert Kiyosaki teaches us in the cash flow quadrant, a very powerful concept called active versus passive income. Okay, so let's write this on the whiteboard here. All right, active, okay, versus passive income. All right, active versus passive. This is a very important concept because remember in episode 1 I talked about how there are 4 kinds of people in the world. We have the employees, we have the self-employed, right? So the employees and the self-employed, the E and the S, all right, they fall into what we call the active income category, okay? And if you are still working for someone, okay, in a job, I'm sorry, right? The bad news is if you stop working, that means if you stop taking action, right, you lose your income, okay? So you don't go to work, you don't go to your job, you fall sick, something happens to you, touch wood, right? If anything happens to you, right, you have to, excuse yourself from your job for a few months, maybe even a year or 2. That's it, you're gonna lose your income, right? So that's what we call active income. So think about someone who works at McDonald's, okay, and he or she is paid an hourly wage, right? And if that person cannot go to work today, tomorrow, the day after, the week after, okay, they have no more income, okay? So the action, right, that they do every day by going to work, right, gets them paid every hour, right, an hourly salary or hourly pay. Okay, now if you're an S, self-employed, as I mentioned in episode 1, it's the same thing. Okay, so I don't care whether you're a consultant, a professional, insurance salesperson, a real estate broker, or a doctor, or a lawyer, an accountant, okay, a contractor. Okay, so long as you are working by yourself, okay, that means you, right, determine how much income you bring into the bank account. All right, that means you have to go out and you have to work, okay? You have to exchange your actions, your time and your actions for your money, okay? So, if you're let's say you're a real estate broker, if you don't go out and sell houses, right? Or, rent houses for your clients, do viewings, right? You have no income, okay? So, if you're an insurance salesperson, if you don't sell policies, you have no income, alright? But insurance is actually something better because they have what we call like renewable premium. So at least they build up, right, some what we call passive income, right, over time because their clients need to renew their premiums every year and they get paid a commission, right, into their bank accounts, right, based on those renewals. So the more clients they accumulate, the more passive income they're building in towards the future, right? Okay, but immediately, right now, today, you have to go out and sell policies, right, in order to earn some money. Okay, so there's a big difference, right, between active and passive income here. Okay, all right. So same thing here. Let's look at example. Let's say you're a doctor. Okay, you're a surgeon, right? So if you're a surgeon, you're a world-class brain surgeon, whatever, cosmetic surgeon. If you don't do surgery, you have no income, right? Okay, you're a world-class accountant, you don't do accounts, you have no income, right? So how do you solve that problem, guys? How do you move from active income towards passive income? Now the key word here, the secret, is a word called system. Okay, everybody just repeat after me. System. Okay, so you need to have a system, something that actually can, like a machine. Okay, it just keeps running, 24 hours, 365 days a year, right? And it just keeps running and running every single day while you're not there. Okay, and that system, that machine, keeps bringing in income passively into your bank account, right? While you're not there. That means while you're not doing any kind of action, okay? So we also call it residual income, right? So there's a very big word, right? Residual, okay? A lot of people don't understand what it means, okay? Residual. right? But residual just means that you have money coming in residually, residual income, right? While you are not working, okay? So in the form of like something like investments, okay? So when we say passive income, we're talking about the B and the I, okay? So B stands for a business owner, all right? And we're not talking about a self-employed business owner who is a sole proprietor, meaning they only have themselves, one person, okay? Right? And if they're not there, the business will not carry on. There will be no income generated without them present, okay? But if you're a real business owner, that means you have a system, that means you have a company, okay? So usually we call this a incorporated company or a corporation, right? So if you decide to do business today, there's a few types of entities that you can register. Depending on what country you're from, I think every country is almost the same, right? So you can have what we call, number one, a sole proprietorship, meaning you're the only person in the company, you're the boss, you're the employee, you're everything, okay? Right? And you have what we call unlimited liability, meaning someone can just sue you, right? And you could lose everything. You could lose your house, you could lose your cars, you could lose your everything in your bank account. So you have unlimited liability as a sole proprietor, okay? The second type is a partnership company, right? And partnership is the same. It just means that you have 2 or 3 partners. But again, without any of you around, right, the business would stop, okay? So a partnership could be something like what we call like like an accountant firm, right, or a law firm, or a construction partnership company, where like 3 brothers, right, form a partnership so that they could share the profits of whatever business they're doing. Okay, so as a partnership, there's also limited what we call unlimited liability, meaning someone can sue the partnership, and all 3 of those people, right, would be liable to lose everything. Okay, now how do you protect yourself against that, right? You have to form a corporation, what we call a limited liability company, or a limited liability partnership, or what we call a private limited incorporation, okay, a corporation company, where your liability is limited, meaning people can sue your company, but they cannot sue you personally, meaning all your assets are limited by your company, your corporation. Okay, so if your company is worth $100,000, that's the most you can lose, right? If you get into a legal problem. Okay, so your own personal assets like your home, your family, your savings, those are protected. Okay, so that's a business system, right? And usually this kind of incorporation, a corporation company, you have at least, right, a few employees there. Okay, and basically you can bring yourself out of the equation, meaning you can go to holiday, right, for 2 weeks, 1 month, even 3 months, 6 months. Your employees are running the business. You have a general manager, you have maybe even a CEO, right? You have managers, supervisors, and staff. So you can bring yourself out of the equation, and you are basically just an owner, director, and shareholder of the company. But you have employees, the people on the left side, who are actively helping you to run and manage your business and generating passive income for you. Okay, so that is what I call a real business owner, a business system owner. So if you find that you cannot take yourself out of the situation, you cannot go on holiday for 3 months, switch off your phone, and still have money coming into your bank account every day, then I'm sorry, you do not belong to the B side. You still belong to the active income side. Okay, so the best is of course I. That means in episode 1 I talked about this, right, in a little bit, right, to be an investor. Okay, so you invest in systems, right? So like for me personally, I've invested in business systems in my own company, my own private limited company, right, where I can take myself out of the equation, but my staff are still running the show. Okay, I've invested in business systems, right, that builds networks of business owners around the world, something like McDonald's business. Okay, but of course it's not McDonald's, right? I'll explain more in a future episode. But what happens is we leverage the network, and that network helps me generate passive income. Okay, So that's what I've done. I've invested in systems. Another example is investing in real estate. Okay, so you invest in houses, right? You invest in apartments. Okay, and you can either pay for it in cash or you take a financing mortgage loan from the bank. Okay, but you don't live in those houses. Okay. Right, because if you live in those houses, those do not generate any income for you. You have to rent those houses out. Okay, and when you rent those houses out, rent those apartments out, okay, what happens is the income that you're getting, the rental income that you're getting, okay, is enough to pay for your mortgage and more, right? And then so your mortgage could be $1,000 a month that you have to pay to the bank, but your rental income that's paid by your tenant in your house is paying you $2,000 a month. Okay, so simple mathematics. What's $2,000 minus $1,000 that you have to pay to the bank every month? So you have a net income, right? Rental income of $1,000 every month. Okay, so basically you're sleeping and every month your tenant in your house is paying you $1,000. Okay, and you can do whatever you want with it. Alright? And when you receive that money, right, what you want to do is you want to put it under your business. Don't put it under your personal income. Why? Because if you put it under your personal income, then we get into what we call the tax bracket of personal taxes. Okay? And depending on the country where you're in, your personal tax rate, right, is going to be very, very different. Okay, like in my country, Singapore, it can go up to like more than 20% for personal income tax. Okay, depending on how much you earn. Okay, but if you put it under a corporation, a company, right, a limited company, right, what will happen is you can actually write off certain expenses like your entertainment, your food, your travel expenses, right, even your flight tickets, your hotels that you're using in your company to run your business. So at the end of the day, right, you would pay a much lower tax to your local government, okay? And that it's totally legal, right? You are not evading tax, okay? You are still getting an accountant to do your accounts every year, report it, right, as it is, right? Your income minus your expenses equals to your net profit, and you only pay taxes on your net profit. Okay, so I'll be talking a lot more in detail about all this kind of financial education, which you cannot learn in school, guys. Okay, because I studied computer science in school, in university. I got my degree, right, after spending like almost two and a half years, right, studying so hard for my degree, my bachelor's degree. But you know what? They never taught me how to manage my finances. They never taught me in school how I can actually, pay lower taxes by having a company, a corporation. Right? They never taught me how I can generate passive income by investing in business systems and in real estate. Okay, so guys, active versus passive. Which one do you want? Ask yourself. You want to stay working for your whole life until you grow old to 75, okay, and you end up penniless without any real savings, or you want to start building and investing in your passive income streams, right, so that you can build up, right, your early retirement nest egg before you get too old and you cannot work anymore. Okay, guys, so active versus passive income. Which one do you want? Who wants active income? No, I don't think so, right? Who wants passive income? Very good, okay, that's you. You're the right person, and that's why you're listening to my Passive Income Mastery TV. Alright, so I'll see you on episode 3, guys, with more fantastic, fun, educational, wealth building information for you. Subscribe to my mailing list, for my 6 paths to success on my website dennisbay.com, and you'll be able to review all these videos on my website dennisbay.com as well. Okay, and follow me on my social media. I need more followers, right, so that I can help more people learn how to become financially free and time free. Okay, so to your financial freedom and time freedom, I love Passive Income Mastery. I'm Dennis Bay. We'll see you on the next episode. Thank you, guys.